My name is Lawrence Mudoga. I am the Technical Community and Breadth Engagement Manager for Microsoft for Africa. In so many words, that just simply means I work with communities and I help Microsoft for Africa land strategic events that affect developers, startups, and students. And as part of Microsoft, Microsoft has taken huge steps towards driving artificial intelligence and machine learning. And it's always great to see communities like these actually step up, grow, and train the people around that. And it's also nice to have people out there in the field actually come and share their learnings around that. As a shameless plug, because I must, I'll tell you one, if you want to find out what Microsoft is doing around AI, please do go check out Microsoft.com/AI. And if in case you're interested in learning how Microsoft AI can be used, or if you're a developer who's more interested in diving deep, do please check out aischool.microsoft.com. It's a full-blown AI school, actually. You can go in and get certified and learn, etc. But today we're not here for that. Today we're here to learn from what people in your community are actually doing. Today we're here to see what people within the country are actually building and how they're using artificial intelligence to not just change their lives, but to change other people's lives and influence the ecosystem around them. And so without further ado, allow me to introduce the man himself, Mr. Alfred Ongere. Come on up.
Lawrence, you need to remind me what you do. Do you always manage events or? Because that was way high up there. Thank you everyone for coming. My name is Alfred Ongere. I'm the lead organizer and founder for AI Kenya. AI Kenya is a community for enthusiasts, learners, and practitioners in machine learning and data science. So we aim to bridge the skill gaps in terms of machine learning and data science in the country. So that's why we have these events and other activities. So I encourage you to check out our platforms. We have a website, aikenya.io. We are on Facebook, we are on Twitter, and we are also on Meetup. So the Spotlight Series event is meant to showcase the work that startups and companies in the country are doing around artificial intelligence and data science. So we already had our first event at this same venue where we featured a startup called Utu, and today we are featuring a startup called Loanbee. So just a brief introduction for Loanbee. Loanbee is a startup that is creating credit scoring solutions for the unbanked in Kenya. So we'll have two presenters. The first presenter will take us through their business side, just basically introducing who is Loanbee, how they started working on the problem, and where they are today. And then the second speaker will now dive into how machine learning and data science come in credit scoring, and specifically for Loanbee as a business. Without further ado, I'd like to introduce the first speaker. His name is Steve Guoko. He is the operations manager at Loanbee. So welcome, Steve.
Good morning. Point of correction, I'm Steve Guoko. That's a very tough word, I know. It's if you're from the Mount Kenya regions, that means your hand, Guoko. So I think I'm very useful with my hands. Maybe we'll learn later. I'm the operations manager at Loanbee. Loanbee is let me call it a subsidiary of Weza Ventures. Weza Ventures is our mother company. I'll dive into that right now. So a bit about Loanbee, more on the story and the financial, the business side. Loanbee started off in June 2017. It was an idea created by a couple of campus guys who saw a very big problem in Kenya, which was most of the people who were unbanked did not have access to credit facilities. And so they came up with a solution where they'd use alternative credit scoring to be able to provide these guys a viable credit score. The name Loanbee, it's kind of self-explanatory. I try to explain this word to many guys the same way. It's an analogy to when a bee gives you honey. Honey is sweet, of course. So us as Loanbee, we give you the loans, which we do assume they're sweet and they're nice. From the word became a very big venture that hopefully will change this country one day. Why did we tackle credit scoring? So a large population in Africa, as I said, is unbanked. They lack access to credit facilities. And so that's why we decided to tap into that market and provide solutions, credit scoring mechanisms that will be able to score these people in Africa who are unbanked. And that's why we chose the alternative credit scoring. We plan to expand to further outside Kenya and to the other countries in Africa. Again, this has been a big challenge, which I'll come to discuss later on. Behind the scenes, the team, we're a very diverse team with diverse skills and abilities from diverse backgrounds. I'll give you a sneak peek into the team. That's basically the whole team. We have guys doing the machine learning, focusing on the machine learning. We have Kevin Buisa focusing on the risk modeling. We have the back-end developer. We have Paul, who is a software developer, also doing Android. We have Miles Obare, who is our machine learning engineer. And Jogu Kinyanjui is in charge of user experience in terms of the design from the app, from the system, everything. We have Sam Juguna, who is our business strategist. And we have Pius Dan, he's our site reliability manager. That other guy at the end is a very awesome guy. I think I already told you about him, so I think we can skip from him. So this credit scoring landscape. So in Kenya, the credit scoring landscape had been well dominated by the credit reference bureaus. You know them as the CRBs. And what they used to do, or what they do, is that they fetch data from the formal banking institutions, the data that the banks hold for their customers. So this means that the data they have is from people who have accounts. But again, we would like also the people who are unbanked, who don't have accounts with these big banks, to also get a viable credit score. So what they do actually, when they don't have enough data on you, especially anyone, let's say someone who is just outside there doing business, doesn't have a bank account. So they maybe already have your name and maybe your details, but they don't have any data, any information on your credit. So what they produce for you is a thin file. So if anyone tries to cross-check your credit score from the CRPs, they'll only get it. It's a thin file, maybe a score that they may be average, or maybe their reports are outdated, because again, they don't have access to you. They don't know what your credit access at that moment. So this is where the alternative credit scoring has come in. With the systems we are creating, with the credit scoring engine we have been able to use the data that is on the mobile phones of our users to be able to assess how viable they are for a loan or goods on credit. The challenges. So when we first started off in June, maybe 2 months into the period we began, around August, we were faced with a huge case of, a very large case of fraud, where guys became smart about us coming into the market. And so identity theft was a very big thing. So guys would get records from somewhere with the names and ID numbers. They'd come and register all these guys on our platform, take loans on their names and on their ID numbers, and then flee. So we had to shut down for maybe a month, and then we came up with very strict fraud mitigation controls. And actually I can brag, from September last year up until this year, 1 year later, we've not even had a single case of fraud because of the mitigation controls that we've put in place. Gaps we've detected include trying to scale to other countries in Africa, because apparently some countries, they have other countries outside Kenya, they have very strict financial laws, and that makes it very difficult for us to tap into them. Some also challenges I can mention are, some gaps I can mention are, there's a very huge gap in the credit facilities where people take goods on credit. Forget about loans. When guys want to take maybe a laptop or a computer or a TV, we do not have access to taking these goods on credit. So this is also a very big gap in the market, and we think hopefully with time we'll be able to conquer it. So our target market, as I will state later on, as much as we offer loans to our customers, we also offer these underlying technologies to financial institutions and to retail merchants who want to give out loans or to give out goods on credit. So our target market, first of all, is the people who we directly offer these loans. Anyone above 18 years who owns a smartphone. So that brings to us people of diverse backgrounds from different regions all over the country, from different educational levels, employment levels, everything. So we have been well received. Since June to 2017, we've had 33,000 loans, over 33,000 loans to 9,500 unique borrowers. We have thousands pending, because again, we have on the Play Store, we have over 100,000 downloads. And we'd really want to offer the loans to these guys. But again, due to a limitation of funds and such kind of hindrances, we cannot be able to reach so many of those guys. So we have a very strict rule on who we onboard and the onboarding process. We've disbursed over 50 million Kenya shillings since then, and we're still ongoing. Our default rates are around 11%, still continuing to improving as we continue using the machine learning. Our growth has been largely organic. We have not advertised as of yet. As I've said, the influx of guys and the limitation of funds could kind of be a hindrance to our growth from that point. So more about us. We are a machine learning company first, because as I said, our core focus is providing these underlying technologies to other financial institutions and retail merchants so that they can provide goods and loans on credit. So Weza.io is our credit scoring engine. All these other stakeholders, they'll get access through the API, which they can request early access to on Weza.io. You can check it out at your own time. And also we also provide white labeling services, where we just give you, if I may say, a skeleton of the whole idea, then you can go and customize it to your own liking and continue providing loans. So achievements, first of all, is being able to provide credit facilities to the people that we have onboarded so far, and hopefully many more in the future. Also providing with financial literacy. So, because again, loans are something, money is personal. When customers believe that the loans are coming from a machine, from an automated service, they sometimes don't take it very seriously. So we have to continuously educate these customers that these loans, they have to repay. This is not their money. It should help them do something, and then they can pay back. Maybe not take for a while until they actually require it. Because again, the thing that's coming up in Kenya is that people are on a loop. In these loan apps, you can see everyone, maybe almost some of us here, you can tell that when you take a loan and you repay it, you have to take another one. You can't stay independent of the loans. So we have to continuously educate our consumers on the product that we have. We also have a diverse team. We learn as we grow, and this has made us be able to tackle future occurrences, future problems, any challenges that we have. At least we are learning and we can be able to face them head on. We've also received international recognition. We were nominated for the Africa Prize at the Royal Engineering Academy in the UK. We didn't come at number one, but it was a platform that we very much appreciated, and it was something good that built us also. So what do other startups? Build a diverse team driven by passion, skill, and ability, because the team makes the product. And if you don't have people who are passionate about your product, it won't go anywhere. So create a work plan and follow it diligently, because again, when you don't have a core mission, you tend to move away from your goal. That is to learn from situations where you've been inadequate, maybe in skills, maybe in knowledge. Maybe when pitching to investors, you failed, you missed something, your pitch deck wasn't right, such kind of things. That would be the advice we'd have to other startups. That has been Steve from Loanbee. Thank you very much.
That was a very good start. Do you have any questions from the audience for Steve, as per what he presented?
Hi, Steve. Pretty interesting. My question is regarding what we were informed last week, where 500,000 Kenyans have defaulted, and they're pushing blame to money lending apps. How is that affecting you, and do you have any defaulters?
All right, thank you. That's a very good question. Actually, at Loanbee, I am very interested in in customer relations, because again, we're building these platforms for the customers. So on the defaults, the defaults on mobile lending apps, I can say are underestimated, because some companies won't reveal their actual default rates. We will reveal ours. Ours is 11%. 11%, I mean, if you take 1,000 guys, give them all loans, only 11% will default. That's a good percentage, because again, you count the guys, maybe, unfortunately, guys who passed on, they factor into the defaults. So there has been, I won't say we are the angels in this, but there's been a big indiscipline towards the mobile lending, and actually the mobile apps, because everyone just wants to pop up a mobile app, give out loans, get their interest. But again, in all that, they forget that these are real human beings that they're giving the loans to. And as I mentioned before, guys are getting into this loop where you can't take yourself out from the loans. When you take 1,000 and you repay, and you don't need it right now, but then again they tell you, now you can take 1,500 Kenya shillings, and the person will take it. But what we advise our customers is, you do not have to take the 1,500. Okay, that's an example of the customer education we do. You do not have to take the 1,500. If you don't need it, just take the 1,000 you had before, if you still need it, but you don't have to take the large amounts. In this way, it has been able to reduce our default rates, because again, you can't take something you can't handle. Because there are loan apps you will apply right now, and they'll give you a loan limit of up to 10,000 shillings. You are not ready to handle 10,000 shillings. I've given you 10, and it's not your money. You'll have to pay back, and pay back with an interest. So I believe what lending apps we should be doing is educating the customers more on what loans are, what lending is. Their financial literacy is a plus for us. We can brag about those default rates because we know our customers understand our loans. Also, there's a traditional method that was the banks used, which they used loan officers. That's another approach we use. Because again, as I mentioned, when guys realize that this is just a system that's sending them money, they can apply money for money, they get money, and when they default, they just get the automated messages, pay back, you'll go to the CRB, pay back, debt defaulter, debt collectors. They do not feel that urgency to repay, but when you give them a human side of the whole process, as much as, yes, we are a technical company, we are focused on tech, the human aspect still stands, especially where you want the customer to realize that they are obligated to another person, not to a system. That's my view. Thank you. Oh, sure.
Good morning. Thank you, and I'm delighted to learn that financial literacy is part of your programming, and I really think a lot of weight needs to go there, because yes, we get tempted, or you guys tempt us to take more and more. Yes, now, my question firstly is, under what regulation do you work in? And then also, the regulator or the regulation you're in, does the underlying technology matter? Or if you're using AI or I'm using paperwork, as long as we are doing the same business, I mean, the regulator just wants to know that you're lending money, and probably the underlying technology doesn't matter. Thank you.
Thank you. So on regulation, this might be a surprise to you, but there's no strict regulation on lending apps. Actually, if I decided to start my own lending app, I go to weather.io, let me just back at that for a bit, and get a white label of Loanbee and customize it to my own liking. I can give out loans at an interest of even 40% if I wish to. The regulation has not yet come in. So in any case, if you're using if your underlying technology is AI, if you're doing it manually, if you go through the credit reference bureaus, regulation has not yet come in. So we are trying to be on the forefront. We're trying to come ahead of that in the sense, again, on customer education. Because when the time comes for the CBK to regulate us, we'll have our books ready. We'll not have ruined so many people's lives. We'll have genuine interest, not just driven by greed, because people want to make money.
Another question?
What do you mean by the CRB? Because I've just come right now, and how does this app help the students? Like, for us students, we have a lot of demands and we need fast loans. Like for me, I need like 5K. How do to?
Wonderful question. All right, thank you. I believe I'll be starting my consumer education from here. That's very fine. So the CRB is the Credit Reference Bureau. We have 3 CRBs, 3 credit reference bureaus in Kenya. We have TransUnion, we have Credit Info, and we have Metropole. So what they do is they collect data from credit institutions. Let me call them that, because again, we are also submitting our data to the CRBs. So they collect data from lending institutions, lending services, on either defaults or on performances of loans. So for example, if you have a loan at Barclays, and you default on that loan, Barclays will send the record that you defaulted by this amount to the Credit Reference Bureau, whichever they prefer. And then when any lending company wants to give you a loan, they first have to check at the Credit Reference Bureau. It's like a pool where they put all your credit information. And the thing people don't understand is credit reporting. When we report to the CRB, we can do it either positively or negatively. So if you defaulted on a loan, we'll send it to the CRB, the details, we'll tell them this person X defaulted on a loan of 1,000 shillings, and he has not repaid up until the point that we are reporting. So if any other institution wants to come and check, they'll find that you have a loan, you have an outstanding loan with another institution. Positive reporting also happens. When you're performing good on your loans, we also report positively. We report the credit union, we'll tell them, hey, this guy has taken this number of loans, they've been this amount, and this guy has repaid every loan on time. So when you get to the CRB, any credit facility you access, you said you're a student, the biggest credit facility student access is HELB. If you default on your HELB loans, they will report to the CRBs, and they'll tell them, this guy has a HELB loan, he's behind on, or maybe the due date is past. So every institution, even Loanbee, before we give you a loan, we'll first cross-check and say, hey, this guy has a HELB loan, we will not give you a loan. You will be risky. But if you have a good record, you have a good score at the CRB, then you can get access to other loan facilities. Not only us, banks, lending apps, everything else. I hope I've answered your question. Thank you.
So my name is Dennis. I have a question. One, what is your interest rate and duration? 2, I'd be interested in knowing how you utilize the CRB data. Suppose I'm listed on CRB negatively. So will you proceed using machine learning? And at the start you said that probably the CRB data is outdated. Okay?
True.
So will you proceed to utilize machine learning to know more about me?
Okay.
Probably I was by mistake. It was like 2 years ago. Okay. So another question is, since the app is on smartphones, and like you are targeting also the Mamamboga, and they are using the Kabambes, so can they be able like utilize the USSD platform to benefit from Loanbee? Okay. Another question would be, like from experience so far, you guys, what are your target customers? Because you said you've disbursed around 50 million to 9,500 repeating customers. I mean, unique customers. And I like to believe some are repeating borrowers, okay? So that averages to around 5,000. So who are your target customers, and how are your loans being utilized? Do you follow up to know how your loans are being used? Thank you.
All right, thank you. I hope I'll remember those questions in order. I'm sure I will. So our interest rate is, it averages around 15%. And a loan duration, it takes 30 days on any loan you take. So immediately after 30 days, you're in default. Let's say it's overdue. We don't call it default by then. Our lowest amount we give, let me add that for free. We give, the lowest amount we give is 500 shillings, and our loan limits go up to 30,000, even further, hopefully. No one has ever gone that far. You know, it also takes time, because we can't just shoot you up to the highest loan limit. The next thing you asked is, yes, CRB, they are outdated, and we also use machine learning. I don't know if I'll be jumping ahead of my colleague, but we have actually disengaged with CRB, because in their own sense, yes, they do have information, but again, as I told you, our information could be outdated. It gives a very huge risk to us, because again, if we score you and you're fine, but then we check with CRB and you have a negative report, we have a negative credit score, we won't give you a loan. But then when you go and find out is that person repaid that loan, they have just not cleared their CRB profile. So we will be basically focusing entirely on machine learning, and CRBs, what we'll be using CRBs for, we will be reporting. It's actually, it's more of a, what do I call it? Let me call it a moral obligation, because again, we'd like other companies to realize what our customers are doing. But on us taking from the CRB, it proves they're kind of not so efficient on what we do. Because again, there are customers we forward their names to the CRB, and their report comes back as -1. That means they don't have the information on that person. So what do you do with that person? You can't deny them a loan because they're -1. So, and when we used to, we had a limit before after it came from the CRB, we take maybe a credit score of 620 or 600 and above. That was our limit when it came to from the CRB. So when you ask, if we got a report that was correct and that user had a credit score more than 600, I'm just saying, I'm not very sure of the number, we could take that customer. But if the credit score was lower than 600, we can't take that customer. Or maybe we'll just wait for them to build their credit score. We only use on smartphones, specifically on Android, because again, the limitations on iPhones, we cannot fetch data from iPhones, any Apple product, we cannot fetch data. So we specifically use Android, because again, access to the phone. If you say Mama Mboga, we assume they have the smaller phones, the Mulikamuzis as we call them. We cannot access that phone for the data that we require. Because again, in some variables we take our battery levels, maybe your location, and unfortunately those phones, they cannot provide such kind of information for us. So we only take data from people owning a smartphone, and specifically Android. There was one more.
Your target customers and
all right, so our target customers. So as I said, we do not have a specific target customers, because anyone who owns a phone and is above the age of 18 years can have access to our loans, and not only our loans, to other mobile lending facilities. So that's why I said people are coming out uncontrollably, because they know anyone above 18 to 100 and has a smartphone, and that phone has enough data to qualify you for a loan, they'll give out your loan. So we do not have a specific target customer. It's just from anyone who owns a smartphone and is over the age of 18. If I'm not correct, I think my colleague here will expand more on that.
My name is Lucy. I'm asking, you've said that you target people with smartphones and above age of 18. But I think the how do I put it? The mamambogas and those people that maybe don't have smartphones are the majority, and could be the biggest market for you. So don't you think you're cutting them out, or how do you plan to include them?
All right. I believe when I mentioned the gaps, I should have added that one, because again, it's a very big point. From the mamambogas, if we cannot access the data on their phones, we can only maybe do it manually, maybe access their name and their ID numbers. But that again is something that's called a thin file. It has no information. We do not have any more information on you, just your ID number and your name, maybe your location. And from there, maybe the data we can get is self-reported data, whether I'm employed, I'm working, I'm earning 100,000. You can self-reported data, you cannot really depend on it, because again, it's open to bias. Anyone can just add anything. So it might be a gap. Actually, you should not have said it too loud. Maybe there's someone already thinking of starting another venture. But again, it's a very huge gap, and hopefully one day we'll come around that and see what we can do. But again, unfortunately, if we cannot have the data, enough data from them, we cannot be able to score them. Yes.
Okay. I was just asking, after you've incorporated AI to your system, what are the specific performance indicators that you've improved by incorporating AI into your platform?
All right, thank you. I think I'll speak on the business side, and largely it has to do with our defaults, because once you go through the whole AI process, the machine learning scores you. Now we'll have to understand how you perform on your loans, and since we integrated with machine learning, there's been a huge decrease in the default rate. Yes, the number of guys who are defaulting on our loans, when we were starting, it was a very huge number. We had defaults of over 40%. So almost half of the people you give out your loans to, they won't pay back. If I'd show you our loan profile, our loan portfolio from August last year, it's a very huge book. Because at that time, we didn't have machine learning. We had not incorporated it. But when we did, it showed a significant decrease in the default rates. And we were able actually to maybe lock some people out and also provide money to those who are actually creditworthy. So from a business perspective, or from the business side, I can say from the default rates, we have been able to see the performance that the machine learning has brought on our side.
Hey, my name is Richard.
Hi, Richard.
I was listening here, and is it correct that your pain points is access to more money and access to data from devices?
Yes.
Okay.
Right.
So maybe we could have an offline discussion about that afterwards.
I'll be very happy about that. Thank you very much.
So we have money in the house, in short.
Yes, we have.
Last one.
Okay, my name is Eric. My question is, how many reviews do you have so far? And on a scale of 5, how can you rate yourself? And they're saying that like 11% are defaulting. Those 11%, who are the majority between men and women? Thank you.
All right, that's a good question. I should have mentioned it. Our Play Store review is at 4.2 stars with 4,000 reviews. And the demographic around the default rate, most of them are men, mostly self-employed. Unfortunately, that's another thing we came to notice, because guys reporting that, because we have a self-reporting area where the self-employed guys, they're the guys who actually default a lot. Also students, there's a huge number of students. We have guys, because I've been on the customer relation side for some time, you had guys calling out, you call a guy, you're like, hey, James, you have an outstanding loan of 1,000, or actually 500, Bob, and you're giving him 2 months after his default day to just repay, just in partially, and the guy can't. He goes, I'm a student. So it's something, it's a bit of a challenge, but we are also trying to understand, because again, it's a learning curve. We're continuing to learn more on it, so we'll be able to understand fully who these loans affect, who are the most defaulters, and from there we can be able to know how to handle these situations. Because again, as much as we incorporate AI, we still have to do the collections. And from there, that's when it's a bit personal. So we have also techniques on that end to collect. So when you find out this guy is a student, you know how to handle this person. If this guy is self-employed, someone said he was sick, someone said they were fired from work, we have to understand all these things. So when we do, we'll be able to understand what kind of loans we can give to these guys, the kind of service we can give them, and also tailor our customer education towards their preferences or their ways of life. So, thank you.
So are they for machine learning? Okay. Yeah, thank you, Steve.
Thank you
for that great session.